Hi, this is Ty with Aces Commercial, and I wanted to share with you a follow-up video. In the previous one, you may or may not have seen, but I went over CPACE. I went over the program of CPACE, how it works for a business and the benefits. But in this video, I want to share with you the financials behind that, what it looks like for your bottom line. But before I do that, let me just share with you the general overview of what we just talked about in the previous video. CPACE is a state program. It stands for Commercial Property Assessed Clean Energy. So it flows from the state level to the city level, and then also down to the vendor level. ACES, Commercial, we are a vendor for the state of Utah. We administer the program called CPACE. So it's a state program that's used for energy efficiencies and building upgrades. So pretty much anything to do with your building that can be upgraded, we can cover. We can do anywhere from 20 to 30% of the building's value. In this case, it's $2 to $3 million because the building's worth about $10 million. It's 100% tied to the building. This is the part that's crazy. 100% tied to the building. No financials, no tax returns, no bank statements. There's really no underwriting at all. It's all tied to the building. You can choose any of these upgrades as a building owner. Our job here at ACE is to eliminate your electrical bill, increases your NOI, and then also we do 100% of the work. Remember, we're a vendor for the state, so we do all the work. What it looks like, the why is it so cool? There is no loan, there's no debt, there's no personal or corporate guarantee tied to this. We cover 100% of the cost. You as a business owner or a building owner also keep all tax credits and maker's depreciation, and it's fully assumable, can go to anyone. Really simple 15-minute application, and we can fund the deals in 45 days. What I wanted to share with you is the numbers behind it. We're working with a deal right now, which happens to be a automobile dealership, and this works for any business. But I just wanted to share with you their particular example because we're working on it and it's top of mind. So the project cost on this particular deal is $1.9 million. That pin's not working too well. Let's switch that out. If we want to go green, but that's not going to work. We're going to go black. So the project cost is $1.9 million. With that, you have about, almost $600,000 in federal tax credit. And then we have an additional $50,000 here in the state of Utah for additional state tax credit. Now, what's interesting on these are tax credits. So remember, they're dollar for dollar. It's not a deduction. It's not a depreciation. It is a dollar for dollar tax credit against your tax bill. Really, really unique, and it only applies to solar. No other product can do this. And then you also get to keep the maker's depreciation. And in this case, the depreciation was about $490,000. And that's for the maker's depreciation. Because these are all capital improvements, just like any other capital improvement, you are able to deduct that as part of an operating expense, part of a deduction for your building increase. So by the time we add in or deduct all of those, we have a new bottom line of like $830,000 on this particular job. So we go from $1.9 million to a starting baseline of $830,000, which is great, but it gets even better. So let me show you how that looks. CPACE is it's a property assessed funding mechanism that allows you as a building owner to put the debt. Remember, it's not a corporate debt. It's not a personal debt. It ties to your building. And so it gives us the ability to what we call pass through. Let me show you how that works. In this particular example for this company, they did about 41,000 transactions in a year. So that would be 41,000 transactions of parts, service department, anything that they would consider just a cost of doing business or a transactional amount. This number here, we charged 50 cents a transaction. And then they also had car sales. So they did over 2,000 car sales in a year. And the car sales, we charged 1/4 of 1%. So 0.25% of every car sale that came through that dealership as a pass-through. Now, it looks like this. This is what's cool. Let's consider this your invoice. And on that invoice, you have your car sale, you have your dealer fee, whatever it is here, and those things add up to your total. You have your total here. The CPACE ties in with your taxes. This is really cool. So we have a tax total, but that tax total already includes your city tax, your state tax, but we can also include your energy tax, which is what CPACE is. And so that energy tax gets lumped into this number, so it's not an above line. You don't have to absorb it up here. You can absorb it down here in the tax total, which makes it super, super unique. Let me go through the numbers on this one. When you add in these two numbers, this particular job almost had $175,000 in increased net operating income. Plus, remember, one of our jobs here that ACES has, I deleted it, but one of our other goals is to increase your NOI through the elimination of your electric bill. With this particular place, they had electric bill of around $120,000 a year. So we talk about an increase in your net operating income. This is what's so important. That number is just about $300,000. So just by doing ACES CPACE, this company is able to pass through a cost of doing CPACE of right here, increase the NOI, and reduce their electrical bill, $300,000. Incredible. If you remember right, this project, right here. The project original cost was $1.9 million, and they're getting not only an increase, but a net operating increase of over $300,000. By the time you factor in all the benefits, we're referring to like the building valuation. We haven't even talked about that. Their building valuation at a 5% cap rate is over $2 million. Their lifetime savings over the whole project is almost $5 million. That's because solar lasts for 30 years, and we also do any other energy efficiency upgrades. But if you could ever show me a product, and I know you can't, but if you could ever show me a product that can fund a $1.9 million deal, give me a net operating increase of $300,000, give me back $650,000 in federal tax credits, dollar for dollar, and another $500,000 in maker's depreciation, I will buy you a steak because it's incredible. I wanted to share that with you. We'll go over questions later, but hopefully you understand kind of the financial dynamics and how valuable it is for your business.